gold just surged past $3,380 an ounce. But this isn't just a price spike. It's a signal. A signal that something deeper, darker, and far more unstable is happening beneath the surface of our global economy. This isn't about market noise or investor hype. This is about the cracks starting to form. Cracks in trade, cracks in debt, cracks in trust. And if you're not watching closely, you'll miss the signs the elites are already responding to. Because behind the headlines and press conferences, quiet moves are being made. Secretive trade deals are unraveling. U.S.-China tensions are back on full blast. And one of the most powerful bankers in the world just issued a public warning. The bond market might be the next domino to fall. This isn't fear-mongering.
Right.
This is what the smart money is doing right now, and gold is flashing red alerts. If you want to understand what's coming, and more importantly how to prepare, hit that subscribe button now. Cover it all here. Gold's next breakout, the hidden currency war, and how to legally protect your savings like the elites do. Because the next wave is already forming, and by the time most people notice, it'll be too late to act. The moment Trump accused China of breaking a major trade agreement, markets flinched, and gold didn't just rise, it jumped. In a single session, gold surged more than $69, hitting levels we haven't seen in weeks. But this wasn't a technical move. It was emotional. It was fear-driven. The U.S.-China trade war, which many thought had cooled, just reignited, and this time the language was sharper. Tariffs on steel and aluminum are back on the table. Tensions over critical minerals are escalating, and Beijing isn't backing down. Investors know exactly what this means. When the world's two largest economies go head-to-head, uncertainty spreads like wildfire. And when uncertainty spreads, smart money runs straight into safe havens. That's why gold spiked. That's why silver followed. That's why oil climbed past $63 a barrel. This wasn't a one-off. It was a reaction to something investors fear is only getting started. But political drama wasn't the only thing moving markets. Because while the headlines focused on trade, something far more powerful was shifting underneath the U.S. dollar itself. As the headlines zeroed in on tariffs and tension, a quieter shift sent an even louder signal. The U.S. dollar dropped hard, down 0.5% against a basket of major currencies. That may sound small, but in currency markets, that kind of move sends shockwaves. Here's why it matters. When the dollar weakens, gold becomes cheaper for international buyers. And when global uncertainty spikes at the exact same time, you get a perfect storm. Demand surges, prices rise. And gold, once again, becomes the universal insurance policy. But gold wasn't moving alone. Silver spiked nearly 5%, hitting levels not seen in over 7 months. Platinum jumped. Palladium climbed. The entire precious metals sector lit up, feeding off the same fuel. Falling confidence in fiat and rising demand for real assets. It wasn't just a flight to safety. It was a warning shot across the financial system. And it's one the elites heard loud and clear. And beneath the surface, something even bigger is starting to shake. Because the next collapse might not come from stocks, but from the very thing keeping the whole system alive. The bond market. While most analysts were still arguing over trade policy, one of the most powerful figures in finance dropped a bombshell, and barely anyone noticed. J.P. Morgan CEO Jamie Dimon took the stage at an economic forum and said the quiet part out loud. You are going to see a crack in the bond market. It's going to happen. This wasn't a vague forecast. It was a direct shot at the growing national debt and the government's inability to rein it in. Trillions in spending, rising interest payments, and a central bank walking a tightrope between inflation and recession. All of it stacking pressure on the one market that isn't supposed to break. And when the bond market starts to wobble, everything else shakes with it. From mortgage rates to credit markets to pensions, investors know that. That's why they rush to gold. Because if the foundation cracks, the only thing left standing is what's outside the system. And gold has always been that escape hatch. And if that wasn't enough, global tension just lit another fuse. One that stretches from Europe to Asia, and it's burning fast. Just as markets were digesting the bond market warning, another shockwave hit, this time from the battlefield. Over the weekend, Ukraine launched strikes deep into Russian territory. The conflict, which had simmered for months, suddenly escalated, pushing geopolitical risk back to the top of every investor's list. And then came the tariffs. The U.S. announced plans to double tariffs on steel and aluminum imports to 50%. The move wasn't just economic, it was a message. A message to China, whose relationship with the U.S. is crumbling by the day. Accusations are flying, agreements are breaking, and the trade war that many thought was over is roaring back to life. For investors, this was the tipping point. A combination of military aggression, economic retaliation, and diplomatic breakdown created the kind of environment they fear most: uncontrollable risk. So they pulled back. They ran for cover. And they poured into gold and silver, driving prices to multi-month highs. But what if this isn't just reaction? What if it's preparation? Because the people moving money right now, they might know something the public doesn't. While headlines focused on tariffs and missile strikes, central banks were making quiet moves, the kind of moves that speak louder than any press conference. The European Central Bank is now expected to cut interest rates again. That means more liquidity flooding the system, more currency devaluation, and more pressure on savers. When central banks loosen the reins, gold almost always surges. It's a direct response to the dilution of paper money. Meanwhile, all eyes are on the Fed. Chair Jerome Powell and other top policymakers are scheduled to speak this week, and markets are bracing for any signal of rate cuts, policy shifts, or worse, uncertainty. But here's what's even more telling. Behind the scenes, central banks are stockpiling gold at the fastest rate in modern history. China, Russia, even developing nations, all quietly converting reserves into gold, not dollars, not euros. Why? What do they see coming that hasn't hit the public yet? These aren't speculators. These are institutions. They're not betting, they're preparing. And while the elites protect their assets, most Americans are left exposed, holding dollars that might not hold value when the real storm begins. The wealthy don't keep gold in shoeboxes or sock drawers. They don't bury it in the backyard or stash it under the bed. That's what amateurs do. And, in a real crisis, that kind of thinking gets punished. Because if you think owning gold is enough, you're already missing half the picture. Here. The truth is, real wealth is protected. Not just from inflation or market crashes, but from theft, fire, and yes, even government overreach. In times of extreme volatility, gold held at home can be a liability. It can be tracked, taxed, or taken. That's why the elite don't take chances. They use secure, fully insured vaults, often offshore or with trusted custodians. These aren't gimmicks. They're part of a larger strategy to stay one step ahead when the system starts to buckle. It's not about hiding wealth. It's about preserving it, legally, safely, and quietly. How do you start thinking like the wealthy before it's too late? Because when the next financial shock hits, it won't be about how much gold you own. It'll be about how fast you can still access it. When it comes to buying gold, not all dealers are created equal. In fact, choosing the wrong one can cost you everything you're trying to protect. That's why there's only one name we recommend: Augusta Precious Metals. They're not just another gold seller, they're trusted by economists, backed by thousands of satisfied clients, and hold an A+ rating from the Better Business Bureau. Augusta specializes in helping everyday Americans roll over part of their retirement into physical gold and silver IRAs without the usual stress or confusion. They walk you through the entire process, handle the paperwork, and make sure your assets are held in fully insured IRS-compliant vaults, just like the wealthy do. And the best part? They're giving away a free gold IRA guide to help you get started. No pressure, no obligation, just knowledge. Click the first link in the description below and grab your free gold IRA kit now, because if you do it right, it'll be the one thing standing strong when everything else falls apart. We've seen the dollar drop, the bond market flash danger, and geopolitical pressure explode all at once. This isn't noise. This is the system sending out stress signals, and the people who understand how it all works. They're already moving their money quietly, strategically, permanently. The elites aren't waiting for a collapse. They're preparing for it. The only question is, are you? This isn't about panic. It's about position. And those who prepare now will be the ones who come out stronger, safer, and freer when the dust settles. Download the free gold IRA kit below from Augusta Precious Metals, the company we trust to help protect wealth the right way. And if you want to stay ahead of what's coming next, from gold moves to currency resets, hit subscribe now, because this isn't over. Not even close. See you in the next one.